Hi folks, this is Jack Spirko here with Miyagi Mornings, episode 81. Today's question comes once again from the social media network that believes in freedom and privacy, MeWe. And you can check us out there. Friend me up and check the post at the top of my profile that's sticky there. And that's the best way to get content onto Miyagi Mornings through that avenue. It's not the only way, but it's one of the better ways. It's the way that almost guarantees that I'll at least read it and consider it. All right, now let's talk about today's topic. Again, this did come from MeWe, and this was a question about LLCs, and it was also a question about LegalZoom. So is it okay to use LegalZoom to set up an LLC? See, the problem with this one, friends and neighbors, is it's assuming that you know that you should be doing an LLC at the time that you're doing it, and you know the way that you should be doing it. If you absolutely know you want to set up an LLC and you're sure about why you're doing what you're doing, and especially if you're an individual who will be the sole managing partner in the LLC, so basically it's a sole proprietorship in the form of an LLC, and again, you're sure that it makes sense for you to be an LLC, there's no reason not to use LegalZoom. There's no reason to be paying an attorney money to draft up your paperwork and file it and all that. You can do it all yourself. It'll save you thousands of dollars, and it's totally worth doing. But what's the biggest word in the English? What's the biggest short word in the English language with only 2 letters in it? If you should be. So to answer this question, because LegalZoom can be a problem, not because it's not valid, but because it is valid, and if you do something that's valid in the eyes of the state when you shouldn't, they kind of have this no take-backsies rule, where like at least for that year, you're doing business as an LLC, and maybe you didn't want to. So let's start off with what are the positives and negatives about using a site like LegalZoom? The positive is that it's cheap and it works. The negative is you may not be making a fully informed decision when you decide to file a piece of paper again with the state and say, this is what I am now. So it comes down to needing some expertise. I personally think you need to consult with an attorney before, a tax attorney, by the way, before you, a corporate structure and tax attorney, before you set up an LLC, a C Corp, an S Corp, whatever. I'm going to confine my discussion today to just LLCs and other corporate structures. I think you would even need to do a little bit more consultation. But there's a lot of reasons for this. And a lot of it is because a lot of people who are going to do business as sole proprietor don't really need an LLC, and why it doesn't do what some people seem to think it does. A lot of this comes from authors and speakers who want to be like business bigwigs and gurus that want to sound smart. So everybody should be doing business as a corporation. That's a stupid blanket statement. And even if the person provides otherwise good information, when they start talking like that, you should tune them out because they can't possibly know what you're doing. So if you're running a little backyard poultry business and doing a few $1,000s a month or less, you probably, not definitely, but probably don't need to be messing around with an LLC. See, a lot of people think that, well, once I'm an LLC, I can start deducting things that I can't deduct if I'm just doing business as myself. That's not true, period. End of story. If a thing is a reasonable business expense, it is a reasonable business expense and a legitimate business expense in the eyes of the IRS and the United States government. If you are a sole proprietor or an LLC, does not change that. It's not like, oh, since I do business as an LLC, all of a sudden I can just claim that, wiping my ass with the best toilet paper is a tax-deductible expense. Either the business and the entity that is that business, whether it's sole proprietor, LLC, C Corp, S Corp, etc., owns the facility, and it's a facility's expense, or they don't. Got it? It doesn't make things that aren't deductible magically deductible. You have to be able to explain in any situation why an expense is an expense against the revenue of the business, regardless if you are an LLC, a C Corp, a sole proprietorship, a simple partnership, an LLP, it doesn't matter. There's a belief that, well, if you're going to be a big business, you need to be a C Corp. I worked for a publicly traded company that was an LLC. Just saying, so don't, and you ain't going to be, rolling out public, IPOs on your company anyway. And if you are doing that with LegalZoom, you're just stupid, right? Because you ain't got it. Right? That's not what this is for, right? So we're not worried about that. But yeah, there's this belief that it makes things deductible that aren't deductible into magically deductible, not the case. And also there's a legal protections belief that is limited that's a limited liability, not no liability. And there's something called the corporate veil that protects when you go into bankruptcy, come and have personal assets and things like that. If you are an LLC out of the gate as a brand new company with no track record, your company has no credit, and any line of credit you obtain, you're going to personally sign for as the sole operator of it anyway. And if you go into bankruptcy, they will absolutely pierce the corporate veil right up your butt. So it's not going to provide an extenuating amount of protections from creditors. It may provide some legal protection, and it may create some legal liability that you wouldn't think of, and we'll save that one for the end. This is, again, why we have to talk to a tax attorney. What do I mean by that? I mean that if you're a small entity and you've really done your due diligence and you really think you should be setting up an LLC, you should contact a tax and corporations attorney and say, I want about a 1-hour consultation to go over and get some recommendations. You bill me by the hour, and we'll handle it that way. So that you know why you're doing what you're doing or why you're going to choose not to do what you're doing. You do not need to give them $3,000 or $4,000, $5,000 to do a corporate filing for your small business. You don't. But you do need them to make sure you're thinking. And this is for a one-man show, right? So there is an advantage from an accounting perspective. If you're an LLC, you will have no trouble once you get your certificate of good standing and all the other shit you have to get from the government and the state and the filing and all, where you can go down to a bank and say, I want to open up a bank account as Bill's LLC, right? And they'll open that up for you as long as you have all the paperwork taken care of, squared away, and signed off and notarized and all the other shit. Now you have a bank account. Well, now you can open up a merchant account, you can open up a PayPal account, etc., all in the name of the corporation or the limited liability company in case of an LLC. And that makes accounting really simple because you don't spend any money from any of those accounts that's not for the business. So you have a very clear delineation between business expenses and personal expenses. And then if you're doing that and you incur a personal expense, you use your personal credit card, you can then reimburse yourself from the company and you file with yourself an expense report that you keep on file. Just like you do when you have a job and you go out and do something and they say, well, use your credit card and fill out an expense report. You got to do that to track that. When you're a sole proprietor, commingling happens because it's me. It's me. And what you can do is set up accounts that are only for your business and only for yourself, but yet everything's in your name. So it makes it a little cleaner from accounting. It makes it a little cleaner from a liability perspective. It's not without its merits, but I think you have to have some level of operations that are significant enough for it to matter that you have something to protect, if that makes sense. And again, this is something we discuss with an attorney and at least a CPA to make that determination. Because in some places you're going to pay more tax because you're an LLC. You're going to be taxed as an entity even though it's pass-through income. Some states have taxes on the existence of the LLC itself, right? So most income should be passed through, but there are some jurisdictions where they can double ding you. So you need to know that. People say, well, file your LLC in Delaware. Okay, maybe, but that's tax attorney, CPA. You got to have that conversation. You have to. So not, again, wrong with LegalZoom, but we got to make sure we're doing what we're doing for the right reason. I always recommend, at a minimum, an LLC when two or more parties, especially unrelated parties, husband and wife is one thing, but when you are going into business with another person, you need a contract, you need an operating agreement, you need to know who can and cannot do what. You don't do business on a handshake there because we don't understand each other often as humans, and by having an operating agreement and your articles of incorporation, etc., when there's a disagreement, then we can all sit down and we can look at the contract. And if you're going to do all that, you might as well form an LLC. And you really need to be talking to attorneys because they'll bring things up you didn't think of. Like, well, what happens if Bill dies and Bill's wife is a bitch? And Bill has a significant stake in the business or even a controlling stake in the business. What then? Well, maybe the other partners have a right to buy out Bill's interest because Bill's wife is a raving bitch but doesn't know anything at all, right, about running the business, and we don't want her to have any control ever in it. Maybe Bill's divorced. Maybe Bill is Betty, and Betty's husband is a raving asshole lunatic, and we want the same level of protection. That's not a sexist thing. It's just an example. You're going to business with somebody, and they're married or could become married. You need protection from their spouse because you don't, and they need protection from yours because you don't know what's going to happen. What happens if somebody dies? What happens if somebody wants out? All of these things are things that you need. This is where you're going to have a multi-hour expensive conversation with an attorney to make sure you have it all buttoned down. And in that case, you may want to pony up the money and have them draft the contract. If you know you're not going to have them draft the contract, so that you make sure you get straight advice, the immediate thing is, look, we're going to file this ourselves. We're going to use LegalZoom. If you're not comfortable with that, don't take my consultation. I want about a 1 hour consultation. I understand you probably bill minimum 1 or 2 hours, whatever it is. Give me the rate. We'll have that consultation, and you send me a bill, and I'll pay it. Whether I go forward or not, I'll pay your bill. That way you're going to get straight dope from that attorney, because they're not going to be like, yeah, maybe, yeah, maybe no. But hey, if I get this guy on board, I got a $3,500 invoice to send him. Because people are not immune to that. So this is how you have to kind of stand back and look at this. So LegalZoom is fine. All of their paperwork is fine. All of it works. All of it's legitimate. But it can get you into trouble because you might do something you shouldn't have ought to been doing in the first place. There are things that happen when you file a corporation or an LLC. And again, I'm sticking LLCs for this, but here's an example. If it's just me, all the income's pass through. So it kind of gives me that nicety of being able to have corporate accounts and all that stuff, but really it's just very simple. All of the revenue, less expenses that comes into income comes to me as though it was paid to me as a contractor, honestly. That's how I'm going to pay taxes on it. It's income, 100% of it. What if you are partners with Bill and Betty, and each of you own 33% of the corporation? 33% of the profit from the company passes through to you. Now it's not simple anymore. Now we have to have separate company accounting that determines everything for the company itself, which you need to do anyway. So you have an income statement, a balance sheet for your company, right? But now we have to do that, and that has to result in shoving out something called a K. It's either a K1 or a K2. I don't remember now. It's a K4. It's a form that you get, and it says you're responsible for this much income. Here's the interesting part, ladies and gentlemen, thinking about running a company. If the company retains the money to do more work with, but it hasn't spent it yet, so it hasn't been expensed against yet, you're responsible for that income even though you didn't get it. And you often end up, when you're doing business in LLC with partners, having to distribute capital to partners you would prefer to keep inside the company, because those partners are now responsible for the income as though they received it even though they didn't. Is that confusing? Let me see if I can make it simple. Two people, me and you. We form us, LLC. Our business has a profit this year of $100,000. You and I take no money out of the company because we want to keep the $100,000 in the company. Got it? Okay. Now, we each are going to report $50,000 in income that we have to pay taxes on, and it's not capital gains, it's earned income. Consequently, if I make a lot more money than you, and you only made $30,000 you're paying taxes on, you're paying tax on 80, you're in one tax rate. Let's say I make $250,000 a year without this. Now I'm paying tax on $300,000. It might change my tax bracket. This is why we have conversations with tax attorneys and CPAs, because if we're going to be in that situation and we know we want to retain the income inside the company, it's far better then to do business as let's say a C Corp or an S Corp, where the corporation pays a corporate tax and we only pay personal tax on distributions, dividends, or if we pay ourselves a wage. All right, and then when we pay ourselves a wage, we also do matching, FICA, et cetera on that, which you do in an LLC too, by the way. See how this is all all of a sudden, wow, this is all complicated. This is why you can't read books by people like Robert Kiyosaki, and he says you should do business as a corporation, and just say, oh, Robert Kiyosaki says I should do business as a corporation. Robert Kiyosaki doesn't know the square root of F all about what you're doing, why you're doing it, how you're doing it, the municipality you're in, the state you're in, the country that you're in, the type of business that you're in, and what the implications are. So what's like an unseen implication? Well, one time, a partner and I and two other people formed an LLC, and we ended up interviewing somebody for a job, and that person sued us. I won't get into why, but that person sued us. It was bullshit. We could have slam dunked them in court, but they only wanted a few $100s. It was like $300. So I'm like, well, I'll just go down there and slam dunk this shit. I had everything documented. There was no way they were going to win. But Denton County, Texas, which is where we were and physically located, and where she sued us in Denton County Court. If you are an LLC, a C Corp, etc., you may not represent yourself in small claims court. You must retain an attorney. Now, the attorney that I had was about $300 an hour, and he charged you for things like driving to the courthouse. So it would have cost me about $2,500. Because of pride, I would have wanted to slam this pea-brain person who did this, but it wasn't worth it to me. It was worth $300 versus $2,500, even though she got the money. She's also stupid enough to put me on as a job reference in the future, which was dumb. You can imagine that didn't work out very well. But this is an example here of why you don't just do a thing if you don't know the implications. So LegalZoom, fine, but should you be an LLC, an incorporation, or a limited liability partnership, or a not-for-profit, or anything else like that, you just have to spend the time with someone with the expertise that can listen to what you're doing, why you're doing it, how you're doing it, understand the laws where you live, and tell you whether or not it actually makes sense for you. Take care, guys. We'll be back tomorrow. We're going to talk about negotiating.